Welcome back to Stock Trader School, from Rookie to Rainmaker, and this is Trade Tech Thursdays, where we look at tools for trading and investing that help you make better decisions. And today, we're looking at one of my favorite pieces of software, Backtrader. Backtrader is a free open-source Python library used to test trading algorithms. It allows you to write your own custom strategies in Python, which is an easy-to-learn programming language, and then test them against historical data and see how they would have performed. You can also use it to visualize and analyze the results of your tests to help you improve your strategies. In this video, we'll take a quick look at how to install and set up Backtrader. Then we'll write a simple moving average strategy and run some tests. We'll keep it brief so that we can get into writing code. So if you want to see a more in-depth tutorial, there are plenty of resources available online. Alright, let's get started. First, we need to install Backtrader. If you don't already have it installed, you can do so with the following pip install command. If you're not familiar with pip, you can watch our video about Python for Finance to learn more. Next, we need to connect our data to Backtrader. Backtrader can read data from many different sources, including CSV files, Excel files, and databases. For this example, we use the Yahoo Finance data downloader to fetch historical stock data for Apple and save it to a CSV file. You can use any data source you like. You can even use real-time data if you want. Now that we have our data downloaded, we can open up a Python interpreter or start a Python script and import Backtrader. Then we tell Backtrader where to find our data by setting the data folder path. We create a Cerebro object, which is Backtrader's main class. Cerebro contains all of the data, the indicators, and the strategies that we use to trade. Now we can start building out our strategy. To do that, we create a class that inherits from Backtrader, Strategy. This class will contain all of the logic for our strategy. Inside the class, we define three methods. The first method is init. This method is called once when the strategy is first created. The second method is start. This method is called for each bar of data in the dataset. And the third method is next. This method is called after each trade has executed. For this example, we're going to write a simple moving average strategy that buys when the 200-day moving average crosses above the 50-day moving average and sells when the 50-day moving average crosses above the 200-day moving average. To do that in init, we first set our order size to 100 shares. Then we add two moving average indicators to the strategy with lengths of 50 and 200. By default, Backtrader uses the simple moving average, but you can use other types of moving averages as well. In the start method, we check if we should buy or sell based on the moving averages. If the 200-day moving average is greater than the 50-day moving average, we buy 100 shares of the stock. In the next method, we check if we should sell or not. If the 50-day moving average is greater than the 200-day moving average, we sell our shares. Now we can run our strategy by creating an instance of it and attaching it to the Cerebro object. We also set the cash to 10,000 so that we have enough money to buy the stock. Finally, we run the backtest from the start date to the end date. Now we can see the results of the backtest by printing out the backtest summary. We can see that our strategy generated a total return of 34% with 14 winning trades and 8 losing trades. We can also plot the performance of the strategy over time. As you can see, the strategy does a pretty good job of following the stock price. Now that we know our strategy works, we can try improving it by adding a stop loss and a risk-to-reward filter. To do that, we add a stop loss indicator that sets our stop loss at the low of the previous bar. Then we add a risk-to-reward indicator that sets our take profit at a 1 to 1.5 risk-to-reward ratio. Then we modify our strategy to only buy if the stop loss is greater than the risk-to-reward ratio. If we rerun our backtest, we can see that our strategy now has a much better risk-adjusted return. We can also track other metrics like our maximum drawdown and our win rate. To do that, we add a backtest observer that prints out the current bar number, the current value of our account equity, and the current value of our maximum drawdown. We also add a stats object that keeps track of our win rate, average win, average loss, and other statistics. Now when we print out the backtest summary, we can see all of these metrics. Congratulations, you just built a simple trading algorithm. But there's still a lot more to explore with Backtrader. You can add more sophisticated indicators and strategies. You can use different data sources. And you can even use real-time data to build a fully automated trading system. That's it for this video. If you enjoyed it, be sure to subscribe for more Trade Tech Thursday videos. Thanks for watching.